And welcome out to our halftime report here, presented by TackleTrading.com. Community of traders got Coach Matt, Coach Tim here, Coach Cody, and Matt. How you doing this morning?
Tim, doing better than the market is.
Red, red, red. We talked about the weakness, that obviously could be there yesterday. The Fed meeting came and gone. Now earnings season is come and gone. You've got a down day today going into the weekend, Matt. But actually, after a pretty good week upward for stock prices, what's your read on this sell-off here, this little red candle?
Honestly, Tim, I think this is just profit taking coming into the weekend after the last couple of weeks that have been very, very bullish on the marketplace. It just showed weakness at resistance, Tim. That's it. I mean, we saw it yesterday coming into the Fed meeting, and the Fed didn't do anything that was not expected. This week, honestly speaking, Tim, this week has been very, very on point with what was expected. The midterms kind of handled what was expected. The Dems were supposed to take the House. The Republicans were supposed to split the Senate. It was a little surprising how much the Dems did take over some of the state legislatures and the governorships. But from a national level, nothing happened on Tuesday that was not expected. Nothing happened yesterday that was not expected. And then what happened today was you had a couple economic reports, both consumer confidence, as the University of Michigan consumer confidence, as well as the PPI report came in, and both of them came in above lines. I'm a little concerned about inflation, and that's what the PPI report showed me today, is that inflation is upticking more than what the Fed wants. And when inflation is upticking more than what the Fed wants, and this has been a concern of mine for a very long time, Tim, because inflation is a lagging indicator. All the debt, all the money, all the deficit that has happened over the last 10 years, you're starting to see inflation pick up into that 2.5, 2.7, 2.9% level year over year, with the 0.6%, which was above the level of what the analysts expected. That tells us everything we need to know about the December rate hike. It's going to happen. And I think that's the market's just using that to lock in profit a little bit. I would not be too concerned. It's just profit taking coming back down into those support levels.
Yeah, obviously the PPI number was a headline grabber. There's no doubt, a lot higher than what was expected. So inflation is something the Fed does watch pretty closely, obviously, when they're making decisions, and battling that back down is going to be important. I think it's pretty simple, though, Matt. Friday, profit taking, kind of just coming back like you're talking about. A good week for the market, good couple of weeks for the market. Now you're resting on the 200-day moving average, and you still have not broken back into an uptrend. There's a lot of questions going into next week. It's going to be a very important weekend to do a thorough prep and analysis on everything in the market to make sure that you're getting a good read.
Well, there's some key areas of the market that I was doing my scanning earlier today for this counter report meeting later that we do after the market tonight, getting ready for those scatter reports over the weekend. And I'll tell you, Tim, given what the market has done over the course of the last couple of weeks, getting overextended, coming into those resistance levels, it's not easy to find a great bullish trade. There are some out there. But Tim, it was like throw a dart at FinViz or Thinkorswim or Options Dynamic Trend or IVEST, whatever scanning mechanism you personally use. And I found bearish trade after bearish trade after bearish trade, but that's to be expected when the market's overextended, hitting resistance. You're going to find a lot of bearish retracements, and you're going to find very few bullish breakouts or bullish retracements, because the ones that did break out, they broke out this week. The ones that were retracing, they confirmed this week. So next week I'm coming into the market, and again, I haven't finished my scanning yet, but I think it's going to be a little bit of a bearish market next week. You're on mute.
C'est la vie. It's going to be very interesting. I know that that's been my
the only thing I got when you were on mute was unfortunately c'est la vie when you came off mute. It like literally just keep that on mute one more second and we're good.
Oh, goodness. It's going to be easy to find good bear setups. There's no doubt about it. And you need to be prepped for the bear side of the market. We talked about energy, materials. Some of the commodity sectors are breaking back down. We're going to break them down one at a time. One very major company that had, was in the news over the night was Disney as well. They had earnings. We're going to talk Disney earnings as well. In fact, why don't we go there right now? Nice little breakout, Matt, actually. If you look at it technically, not a lot of carry through and not a bullish day in the market that you're going to want to chase. The Disney numbers did come in fairly okay, though. Not a breakout quarter or anything like that, but decent.
Well, no, it held up the market a little bit, especially early on. And as the market started selling off intraday today, and as you can kind of see this here, Tim, I'm going to break this down to a 15-minute chart. So this is the overnight numbers that you saw. Boom, 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 real positive reaction. This is the market opening up. The first hour of the market, hour, 15 minutes, Disney doing really, really well. And then right when it hit 120, it started doing a little bit of retracement back up into the breakout channel, and now it's sitting at 118. You got, if you're missing the run, you got to like these kind of retracements. They're intraday entry points, especially for swing trades or day trades. So, you know, from the daily chart, yeah, it tried to break out earlier, hit its head at 120, came back down. I think this makes it for a cleaner setup coming into Monday than it otherwise would have been, Tim. And if you look at this on the S&P 500 here, let's go look at the ES a little bit. And then here's the same 15-minute chart, Tim. So here's the market opening up right here. Once the market started selling here, Tim, Disney just started selling as well. I wouldn't take it too much of a negative reaction. Disney had a positive earnings report, and that's something to look at, because that breakout of 118 and now the intraday resistance at 120, both of those are clear areas to trigger into.
You know, one of the major stocks on the S&P that's very active here today is Activision as well, ATVI. They had earnings last night. Matt missed. These game companies have been in the news all over the place. You know, obviously a big gap down. We talked gaps last week, actually. We were, you know, going through the different types of gaps. On a big drop like that, do you see that as a, you know, kind of runaway gap? Is that something you could trade actually with a green candle?
No, I wouldn't touch that gap on the buy side. I mean, it got absolutely slaughtered on the earnings, Tim. Earnings came in, if you just highlight that right there, earnings came in at 4.2. Its earnings estimate was 5.5. They warned on guidance as well. This is not something you want to touch from the buy side mechanics. You got to wait for it to set up again. So no, this is no buy for me right here.
Yeah, some of the biggest gainers here today,
Yeah,
Chesapeake.
very quickly, Tim. I want to give a shout out to Coach Frank over there at Tackle Trading, because Coach Frank, I don't know when it was like earlier this week, maybe on Monday or Tuesday, maybe it was on Friday. I can't remember the exact date, Tim. But the reality is, when we were looking at Activision before its earnings, Coach Frank said, hey, listen, there was a gaming convention here just recently, and the simple reality is they booed a lot of these releases. And ever since that moment, and again, shout out to Coach Frank, because ever since that moment, these gaming companies have been absolutely slaughtered out there.
Mm-hmm. Yeah, no, I think he was talking about it on Monday or Tuesday. You know, over the weekend they had that BlizzCon, and obviously Activision now down. They had a real bleak earnings report, down 10% here today. Another stock taking it on the chin as well. GE again down 8%, more down 77%. Oh my goodness, this stock. There's no rest for the weary. If you're long GE, there's no doubt.
Down 8%. I saw somebody on Twitter yesterday say 9's the bottom, guaranteed. And I'm just like, there is no bottom for GE. That's not the bottom. And then obviously today down 8%. Just this is a no buy. It's been a no buy for a very long time.
Yeah, you know, and it's a good lesson. You don't try to catch a falling knife. Don't try to find a bottom. Don't try to pick a bottom. You know, you trade on technical confirmation, trade with the trend. I mean, it's a story ages old as the markets. There's no doubt about it. Some of the better.
Fundamentally weak, economically weak. No, this has J.C. Penney and Sears written on it.
Mm-hmm. Let's take a look at the Dow actually, and break down that market as well. You know, we've called this one with relative strength, and it actually has held. It is one of the indexes that has put in a higher pivot high here, Matt, rallying very, very strong throughout the week. Red candle today, top gainers on the Dow: Disney, Pfizer, Coca-Cola, Walmart, and Procter & Gamble. You're getting some relative strength out of the conservative names.
Exactly. Name those companies again, Tim.
Disney, Pfizer, Coca-Cola, Walmart, and Procter & Gamble. So there's money going into the conservative areas, obviously defensive play.
And we've been talking about that for a month. So yeah. You also got Coca-Cola, Dr. Pepper. I mean, all of those are doing very well right now.
Mm-hmm. Yeah, big losers though. Caterpillar down 3%, Cisco down 2.6%, Apple down 2.5%, coming back down towards the 200 mark. We talked about that Caterpillar bear retracement. Obviously, it's confirming here today, showing weakness. Materials and energy, Matt, they do not look good with the oil sell off, and we were highlighting oil. We'll get into that here in just a minute, but they have been beaten up. And the Dow got some mixed action out there. It is relatively stronger than some of the other indexes, but red candle here today on a Friday.
Well, a lot of those companies that you just named were overextended. They're tough to trade. Watch that come back down into support. I don't see this as a bad thing, Tim. Markets don't go straight up. Markets go up, they retrace down. They go up, they retrace down. You got to like the down from a technical perspective against the other indexes. Number
Mhm.
one, it got up above the breakout channel. You're setting a higher high right here around 26,200. It's retracing. Watch how that market responds here at about 25,800, or as that 20-day moving average starts catching up to it, Tim. Unlike the other indexes that still have overhead resistance to challenge with, like the S&P 500, the NASDAQ, and definitely the Russell 2000, the YM now has support trying to hold for it. There's a big difference in that. And so look at this from a bullish perspective. Obviously, it needs to come back down into that support channel, but you should be looking at that for bullish opportunities coming in on Monday, Tuesday, Wednesday of next week.
Yeah, definitely a stock picker's market. You've got relative strength in some areas and definitely a lot of weakness in others. One is technology here today. Let's take a look at the NASDAQ NQ. And some of the aforementioned names, we're going to break down all the FANG stocks. You know, Amazon's a really interesting chart coming back into 1700. We'll look at that one here in just a minute, Matt. But this one, you can just see the difference between this and the Dow. The Dow had a higher pivot high, you know, not necessarily an uptrend yet, but it did have strength. And now the NASDAQ never really did get that. You're in no man's land, quite frankly. I think you're fairly neutral here.
Yeah, I would say neutrality.
Yeah.
You know, we've been bearish on it. I was bearish coming into the week, but you got to like the positive response coming into Tuesday. It did get up above its 200-day moving average. It smacked its head at 7,200, which has been an intraday and a daily level of support and resistance for the market. So it hit its head there. It's taken profit, very similar to what's happening in the rest of the market. But from an overall strength perspective, I think you got to go, if you had to rank them, YM1, ES2, NQ3, RTY4.
Yeah, I agree with that. Some of the only strength in the NASDAQ here today, things like Ulta Beauty, Fox, Monster Beverage, you have individual names that are still going up, and you have a few of them that are kind of in there. We had Ulta on the bullish option report this past weekend, Matt. Here, this one's a burner. It's obviously at a profit-taking zone. When you're getting into a Friday and you're up near, you know, a high point at resistance, that's the kind of thing where you would take the profit off the table on a swing trade, I'm sure.
No, absolutely. I mean, coming into the weekend, take the gift. That's what I would what I would do. I mean, there's a lot of variables over the weekend. You're sitting at resistance in a lot of the in a lot of the marketplace. Ulta's had a wonderful week this week, and if you're in that bullish trade, yeah, I'd probably definitely look to take a lock-in profit. I did not personally make that trade. Most likely, I'll be perfectly honest, if I did make that trade, I probably would have been stopped out yesterday. So just knowing how I trade, I would have had a stop loss right underneath the breakout channel. And so I probably would have been stopped out. But if they weren't stopped out, this is an obvious moment to say, oh, yeah, I'm going to take that gift. Let me lock in some profit.
You know, and welcome out halftime crew. I see quite a few questions coming in here. Give me Yelp real quick before we look at RTY. I noticed Coach Frank and Maria both have mentioned this one. 30% gap down on their earnings, Matt. Obviously a high flying company, but that is just a catastrophic gap right there.
Oh, it's a massive gap to the downside. Track $30. If you're looking at this from a trading, I don't trade Yelp, but if you're looking at this from a trading perspective, look at how the market responds around $30.
Yeah. Finishing up on the indexes, go to RTY if you would. It has been the weakest out of all the different majors, obviously. Going to go down today on a day where the market is weak as well. Sitting on a rising 20, falling below the 250. You're kind of in the middle of some congestion here with those moving averages. Pivot relationships as well, very aggressive downtrend. But then it did kind of come back a little bit. You're moving into more of a consolidation. You might be developing a trading range over the next couple of months, Matt.
Track it at the 20-day moving average. That's going to be important for it. Track it at that 1550 level, Tim. 1550 is a very important level for the Russell 2000. It's acted as resistance. It's acted as support. You can see it acting as resistance over here. It was acting as support over here. Now that it got back, and it showed weakness coming into the week of 1550. That was an intraday breakout trade that we talked about a few days ago. But as it got back up, it got a little overextended. Now it's coming back down into that breakout channel of 1550. 1550 to the 20-day moving average of 1540 is where I identify this support level. If the Russell's going to have any chance here, it's got to show a little bit of slowing momentum at 1550, upward movement in price. If you get back underneath that 20-day moving average, Tim, You're breaking all those support levels, and 1500 is within 2 days away from that level.
Yeah, definitely. Stock showing some weakness across the board. A lot of those key levels are going to be in play here as we move into next week as well. We're about 3 hours from the close of the week here, Matt. Markets will probably end the week higher, and that will be 2 weeks in a row. So a little bit of neutrality from a long-term, short-term perspective. You have the short-term selling, you have the long-term kind of popping back up just a hair here. I definitely would not be calling this bullish by any stretch of the imagination. Still kind of bearish. One area that is bullish, though, is the dollar. And maybe the strongest signal of almost anything in the market has been that dollar rallying. And this is the biggest product, Matt. It's the number one investment in the world. It has the most volume, the most eyes on it from a global perspective. A breakup here at 97 or so could be very, very intriguing. What's your read on the dollar here?
Said it yesterday, said it the day before, said it the day before, said it the day before, said it in the Forex report. The dollar above 96 is bullish. Watch it go into 97, and then we'll wait and see how it responds at 97. It ticked 97 today. You got both 97 and 97.2. But with the strength coming into the dollar over the weekend, with the near guarantee that we get another interest rate hike in December, the dollar is going to respond bullish in that perspective. But track that 97 and 97.20 level. If you get above that level, Tim, there's going to be some very good trading opportunities on long dollar against the Swiss franc, long dollar against the euro, long dollar against the Japanese yen. That's where the trade setup is really happening. So if you haven't been trading it at 96 to 97, you can't get into a long dollar trade now that is smack dab at resistance. We saw what happened the last 2 times it hit 97, Tim. The last time, 2 times ago, tick 97, look what happened. Now, tick 97, 97.20, showed a little bit of relative weakness, still a nice bullish uptrend. I like the dollar's chance of breaking 97.20. I like the market coming into this movement, but you got to wait for that 97.20 level to be broken.
One of the more volatile currencies in the dollar cross pairs today is the dollar against the pound dollar cross. And it's just dropping precipitously, Matt. Obviously 2 big, strong red candles. They had some kind of resignation from Joe Johnson over there across the pond. Weakness in that one. And then the dollar CAD is rallying like crazy as well. Probably a lot of that oil and commodity weakness.
No, definitely with Canada oil and, commodity exporter to the world. So you're going to see some weakness in Australia. You're going to see some weakness in New Zealand a little bit, and you're going to see some weakness in the Canadian dollar as well. If you look at the British pound here, the level that I've always tracked for the last month is 130. As you got underneath 130, obviously you start seeing a little bit of a sell-off, not much, a little bit of a sell-off. But if you're looking for this from a trading perspective, I would wait for the intraday to kind of retrace back up into that 130 to see how it tests at that point. But that 130 mark is really important for the pound dollar pair.
Yeah, I agree with that. And, as I look at the currency markets and I look at the volatility going into a Friday, you've already got the banks closed in Europe. The only thing you could really do is maybe a day trade here or there, scalping into the close. But more of this is setting up for next week with the dollar strength and weakness against these other currencies. Commodities, Matt, let's take a look at all of the different ones. Start with oil. And I've been bearish on this one for quite some time now. We've been talking about the weakness. We've been talking about the sell-off. That is just a sharp downtrend. Is 60 a bottom here? Would we even dare try to call where this bottom is? Yeah.
Heavens, no, I'm not calling a bottom on oil right now. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles in a row, Tim. That is 10 candles, 2 weeks in a row, all down. If anything, this reminds me of 2014, 2015 than it does coming into 2017, 2018. So no, I'm not calling a bottom on oil. 60 certainly could act as a support level for the short term to see a retracement, but any type of buying behavior on oil is going to be met with swift resistance from the bears.
Mm-hmm. Yeah, bears are in control. There's no doubt about it. A lot of hedge funds probably are just getting beat up on this thing moving, and traders alike.
Oh, hedge funds love long oil. So do airlines. Love long oil.
Oil selling is usually a risk-on type of trade, and not very good for stock prices, by the way.
If oil goes down, you need to watch those airlines, especially airlines like American, Delta, United, who are infamous for trying to hedge oil with trading in the oil market. They got it handed to them in 2014 and 2015, Tim. So if oil starts coming down aggressively, yeah, there's a lot of companies, a lot of industries that buy oil in the futures market to hedge against market risk. And as oil starts getting absolutely pummeled and pummeled and pummeled, that's going to show up on their earnings reports.
Yeah. What can OPEC do here? I saw them in the news quite a bit. I mean, it's a lot of posturing, a lot of
Well, does
huffing
OPEC
and
want to
puffing.
do anything? That's the debate, Tim. I
Right.
mean, we don't know what's in the mind of OPEC. We don't know what's in the mind of Saudi Arabia. They certainly could do something. If they wanted oil to go up right now, Tim, all they got to do is one thing. All they got to do is make an announcement that they are contracting their rigs and they're not looking to expand supply of oil, and they're going to max output at, we'll say 10.5 million barrels a day. That's all they got to do. That's it.
Mm-hmm.
And if they did that, oil would respond bullish. So obviously oil is prone to that volatility in OPEC, Saudi Arabia, Russia. Obviously the U.S. is one of the major suppliers of oil to the world now, energy independent in and of itself. So, yeah, let's wait and see. But they haven't said anything right there. Oil's still a no buy.
Yeah, oil, not just crude oil WTI, but also Brent oil down today. The only energy has been natural gas going up. In fact, the only commodity that's green across the board, and it has had an explosive rally, Matt, with the NG contract. Wow.
Wow. Wow. It's one of those times I wish I would have been just doing naked puts.
Sure.
But
yeah.
I'm not gonna change. Obviously, this had a really good uptick because of the three wildfires that are happening in California.
Yeah.
And exploding. I'm not buying here, but look for a retracement back down into that 3.6 level, which is the breakout channel. That to me could be a very significant trade. Maybe not on natural gas for a lot of people, but something like on UNG. Look at this bad boy here on UNG. Look for that to potentially retrace, fill that gap at 29, and that could be a significant trading opportunity. So what I would advise is a little patience here. Just a little patience, let it kind of set up. I do think it's a little slight overreaction to that. But Tim, I want to show you a stock on the Tackle 25. PCG just got absolutely crushed because of, and this reminds me of 2017 when PCG cut dividend because of the wildfires. When PCG got cut in half from a price perspective. If you want to look at this from a weekly chart here, Tim, this is what happened to PCG the last time we had nasty forest fires. Okay. Mm-hmm. It was in later part of 2017. We're now starting to see that again in the later part of 2018. I'm not saying we're going to repeat this, but there is some commonality there. Keep an eye on that.
One product I do want to talk about quite a bit is gold, and we got to break this one down, Matt. Obviously, news here driving a lot of things, the wildfires driving some of these commodities and PCG, the inflation number actually, and usually it's not going to be that big a deal, but it was such a surprise number that gold has just been taking it on the chin here. Rising interest rates, strong dollar's going up, gold is going down here. You can't really call this a bullish chart at this point with that hard candle. It's back into neutrality. Now, I wouldn't call it bearish either, right? I would be neutral on this one, as now we are in between two big major trading ranges.
Sometimes when we're looking at analyzing gold and gold breaks support, I kind of feel like Wolf Blitzer from CNN in 2016 when he called the presidency for Trump. I thought Blitzer was about to cry a little bit. In fact, I think he did cry a little bit. It was, but I kind of feel like that sometimes when I'm analyzing gold because I want it to go up so bad. No, this broke support. There's no doubt about it. It broke support. It's back into neutrality. You go back to tracking your ranges. Right, 1220, 1200, 1180. Those are your ranges here. I still think it's a buy above 1220.
Yeah, I would agree with that. I'm looking at those ranges, and if you do break and run, you can still buy it. And that would be on confirmation. I don't think you can buy it at support here, and definitely cannot buy it below, where we are breaking down. Maybe down at 1200, you could do some kind of hedge, but I don't know. It's probably a wait through the weekend. Let's see how the price action confirms.
I'll tell you, with the strength in the dollar today, if 97 holds on the dollar, and Tim, it certainly could, right? We deal in possibilities and probabilities, not certainties, correct?
Mhm.
So the probable outcome, and maybe it's only 55%, Tim. It's not a high number. 97 and 97.20 is a very significant resistance level for the dollar. And there's other variables as well. So maybe you put it into 55, 60%, Tim. Well, that still puts you as gold coming down 55 to 60%. So if the dollar does go up and break that 97, 97.20, gold's not going to 1200, Tim. Gold's going to go to 1190 and then 1180 if that does in fact happen. So keep an eye on gold in comparison to the dollar. They have an inverted relationship. If the dollar breaks, gold will sell. If the dollar settles, you should see some price appreciation coming back into gold.
Commodities across the board are pretty much down. The only one up is that natural gas. All the metals, copper, gold, silver, platinum, they're all down. Everything against the dollar. It's a currency commodity relationship going on there today. And I do want to look at Bitcoin real quick and kind of talk just one quick note about that cryptocurrency. Obviously, it's not going to get to 60,000 this year, Matt. Cody reminded me of my prediction last year when we had our podcast.
Yeah, I don't think you're getting that one. Now, to remind everybody, Cody,
was that meant to be some sarcasm?
I think it was. Every year we do our prediction podcast, right? And we analyze gold, the dollar, Bitcoin, the markets, crude oil, and so on and so forth. And we just do it for fun. There's too many variables for projecting on January 1st of 2018 to January 1st of 2019. So it's more just something we do in fun. But in that, we all give one crazy, prediction. Just literally, like there was one time we did something like, oh, well, the Greece is going to leave the Eurozone, right? Mm-hmm. So these are crazy predictions, right? It's like a 3 delta probability type situation. And Tim says, I was going on an anti-Bitcoin tirade with Bitcoin at like 18,000 or something at the time, 14,000, can't remember what it was. And I was saying, no, it's coming back down under 6,000. It's coming back down under 8,000. And Tim says, nope, my prediction is Bitcoin above 60,000 by the end of the year. And I'm like, oh God.
There was too much groupthink going on in the conversation. You and Noah and Gino and everybody were talking about how Bitcoin's going to get crushed. And I agreed. I was trying to map out a contrarian battle there. It did not work out. Should have went with the trend there.
That was one of those. That was one of those. You make an extreme, just outlandish prediction, and then if it doesn't happen, no one remembers it. But if it does, it's like, I'm a genius.
He will remember this prediction when Gap Prediction podcast in December. But no, it's Tim, what do you want to talk about Bitcoin here? Because it bores me these days.
6,000 holding. I mean, it's interesting. I've been watching this, market for quite some time. I just brought it up to make fun of myself. Obviously, we do get some predictions wrong.
I will say though, I do think the volatility in Bitcoin in the last 3-4 months, Tim, is a positive thing long-term for Bitcoin.
Probably. Yeah.
I do think that, because if you look at this, guys, Bitcoin has had a meteoric rise just in popularity, discussion, trading, you name it, over the last 2, 3, 4 years, Tim. And it's been extremely volatile. In 2017, went from 1,500 all the way up to 20,000. In 2018, went from 20,000 all the way down to 6,000. But in the last 2-3 months, Tim, Bitcoin has been just hovering between 6,000 and 6,700.
Mm-hmm. Yeah.
So for Bitcoin holders, you kind of gotta like that volatility has subsided here.
Sure.
6,000, 5,800, obvious support zones for Bitcoin.
We are at our halftime point of the halftime report, and I just want to say welcome. Thanks for being here, guys. Friday afternoon, 11/9/2018. Markets are selling. Markets are volatile. Always opportunity out there to trade. And what better place than come and join the community here at Tackle Trading, obviously. Give us a quick like and a share. And Matt, Friday is our Friday Fun Day, where we put a poll out there on Twitter.
Yeah. And before we get into that, I was doing a little research today, and I do want to talk about something in the financial sector. Okay.
Yep.
So I was doing my scanning today, and guys, there's a couple things that really stood out to me when I was looking at every chart in the financial sector itself. The financial sector, and let's go ahead and look at finance very quickly here. The financial sector has had, a very positive response over the course of the last 2-3 weeks, Tim. It is coming back up into resistance. I do expect a retracement in the financial sector coming back down into that 26.5 level, next week. So I do have a bearish rating just simply because my projections go week by week. So I do anticipate it coming back down into that support level. But Tim, there's something that really stood out to me in looking at all these charts here today. There's a couple things that stood out. Number one, foreign regional banks, not domestic regional banks, but foreign regional banks like BMA, showing a little bit of reversal posture here. As you can see, it's found a double bottom at support here, a double bottom at resistance of 50. It's a volatile company, no doubt, and it does have earnings coming up on the 27th. But you now have an upward moving average sitting at like a Morningstar doji over the last couple of days, sitting at that. This is a company that, and I don't know much about the company, I was just doing my technical scans, but this is kind of a double bottoming pattern that could potentially, show a bullish retracement at the moving averages, or potentially confirm that breakout of 50. So I'm showing a little bit of strength coming back up into those foreign banks, foreign regional banks. Here's another one here, Tim. Look at the strength of this company here, right? You obviously overextended. This is something that you might want to put onto a watch list. Wait for that to come. Wait for that to come back down. And this is BPOP again. So you're looking at strength, overextended, look for retracement to come back down into that 52.5 range. That's something to put on a watch list. But Tim, what really stood out to me in terms of the strength, okay, is REITs, is REITs. They have been showing tremendous strength over the last couple of weeks. Just to kind of give you a couple of them, VTR, looking smack dab at a breakout at $60 there. Another one, and I'm just throwing these out there. There's like 10 of them. No, that wasn't it. Oh, I need to learn how to read my own handwriting here. Here's another REIT right here, Tim. Look at the breakout. Look at the price movement coming into it. Here's another one, WELL. And some of these REITs are real estate driven, some of them industrial driven, some of them are healthcare driven. But I am seeing a lot of strength coming into the REITs. I'm seeing strength coming into the international foreign regional banks. And you know what shows extreme weakness? Things like FITB. Coming smack dab into resistance. So I'm looking at bearish retracements on the domestic banks. I'm looking at potential strength coming into the international middle banks. I'm also showing strength coming into the REITs. That's something to keep your eye on over the course of the next week.
Well, and obviously with the Fed raising it.
I love it when he goes out.
Oh, we just lost him, guys.
No, we got to let him go into that. But what we were going to talk about, Cody, is that kind of
bank is a.
Oh yeah,
no,
he's back.
What's going on here?
I was here the whole time. I mean, this is like
you weren't here.
Anyway, what I was saying is, as interest rates go up from the Fed, obviously volatility in the financial sector is going to be there. That Fifth Third Bank was a beautiful chart. There's a lot of stocks in that sector setting up with beautiful technical setups. So definitely a watch list to develop for next week. Yep.
Okay, that was a fascinating point. It would have been so much better if we didn't get the frozen screen there. But Friday fun day, Tim. Friday fun day. Explain it.
Well, here's the thing. We've got halftime crew. We've got, quite a few traders out there that we know very well. We're developing a community here and a relationship, and we want to teach you guys. We're veteran traders and coaches and mentors. And so we just kind of throw it out there and say, hey, once every week, we're going to just teach a concept based on what it is you guys want us to teach. And on Thursday, Matt, we gather a few responses, from the chat. We put it on our Twitter poll and thread and say, these are the things that we might want to talk about. And then we let people vote. So it's definitely a democracy thing. And today we're going to be teaching the go-to bed trade. Overwhelming numbers on the vote totals on that one came in. Yeah. People want to learn it.
People want to learn to go to bed trade. It's a good trade. First and foremost, the go to bed trade is really kind of it's an overnight trade is what it is. But it's really a trade based on when certain markets are opening up and when certain markets are closing. And so to understand the go to bed trade, you got to understand what is known as the bank open trade is what you really need to understand. Now, the bank open trade has been a trade that Forex traders have been using for decades, Tim. Decades. It's a very simple trade, but it's based on understanding when certain banks open up around that 24-hour cycle. Okay, so I want everybody to write down these time frames. Okay, and there's a good website called Forex Market Hours that will kind of show you when banks are open, when banks are closed. But the first bank that opens up in the world in that 24-hour cycle is the Royal Bank of Australia. And the Royal Bank of Australia opens up at 5 p.m. Eastern Standard Time. Okay, so that would be 3 p.m. our time, Tim. That would be 5 p.m. Eastern Standard Time. The second bank that opens up around the world is the Bank of Japan. And the Bank of Japan opens up right about 8 p.m. Eastern Standard Time. Okay, so the first bank is Australia. The second bank is the Bank of Japan. About 30 minutes to an hour later, you got the People's Bank of China that opens up. That's not a major bank open, but it certainly does impact the go to bed trade as well. Then you go all the way to Europe. Okay, and at about 2 a.m. Eastern Standard Time, you have the ECB open up, the European Central Bank open up, and that opens up out of Frankfurt, Germany. And then an hour later, you have the Bank of London open up at 3 a.m. Eastern Standard Time. And then the last bank to open up in the world is the United States Central Bank, and those banks open up out of New York, and in New York, it is at 8 a.m. Eastern Standard Time. So 8 a.m., whatever local time, is when those banks open up. So once again, you have, and all these times are Eastern. You have 5 p.m. Eastern, 8 p.m. Eastern, 8:30 to 9 p.m. Eastern with the People's Bank of China. Then you have 2 a.m. Eastern with Frankfurt, the Bank of not the Bank of England, but the ECB. 3 a.m. Eastern is the Bank of London, and then at 8 a.m. Eastern is the actual United States Central Bank. Now, because there is a bank that is opened up at any point in that 24-hour cycle, because you always have crossover with every bank being either open or closed, it creates a 24-hour market trading environment, right? So when you're talking about the futures market, when you're talking about the Forex market, the commodity market, all these markets, these are 24-hour markets because they're not just traded in the U.S. U.S. stocks are just traded in the U.S. You got to buy them on the U.S. exchanges. So that's why they're only open 6.5 hours a day, because it opens when the exchange opens, then they close when the exchange closes. But because the banks are open up around the world 24 hours, you have constant trading around that 24-hour period. So when you're talking about the bank open trade, it's a very simple trade. Okay. Now I'll kind of explain it. Yeah, Jonathan, very quickly, forexmarkethours.com, okay, forexmarkethours.com, and that will track the four major banks. The four major banks are the People's Bank of Australia, not the People's Bank, the Royal Bank of Australia, the Bank of Japan, the Bank of London, and the New York banks. Those are your four major markets. And then you also have the People's Bank of China and the ECB, but those kind of get rolled up into the Bank of Japan Open and the Bank of London Open. So the Bank of Australia opens up at 5 p.m. Eastern. The Bank of the Bank of Japan out of Tokyo, that opens up right now at 8 p.m. Eastern, but that changes based on daylight savings time. By the way, daylight savings time, can we get rid of it?
I think I would support that instantly.
It's so confusing.
It doesn't make sense.
It doesn't. Anyways, okay. So it does depend on daylight savings time, but right now it's 8 p.m. Eastern Standard Time. The ECB out of Frankfurt, Germany opens up at 2 a.m. Eastern Standard Time. The Bank of London opens up at 3 a.m. Eastern Standard Time. And then the New York banks open up at 8 a.m. Eastern Standard Time. Now, Tim, I'm just going to pull up a paint program very quickly. Okay. And I'm just going to explain kind of the difference between how a currency or the market itself, how they perform when a market is open versus when a market is closed. So a lot of times a currency, even though you can trade currencies 24 hours, ladies and gentlemen, it doesn't mean currencies don't sleep. Okay. Mm-hmm. And what I mean by that is, and I've given this analogy before, so if you've already heard it, just bear with me for a second. Tim, if it is, let's go 5 p.m. No, let's go. Yep. 5 p.m. Eastern Standard Time. Okay. Mm-hmm. So if it's 5 p.m. Eastern Standard Time, I can trade any currency in the world, correct?
5 East means and we're talking not,
No, I'm just saying, I'm saying as a trader, I can go trade any currency.
Yeah.
Right.
Yeah. 24-hour market.
But that doesn't mean every currency is responding the same way in that same time frame. Okay.
Correct.
So for example, 5 p.m. Eastern Standard Time, I can go trade the euro, I can go trade the pound, I can go trade the Swiss franc. Okay.
Mm-hmm.
But what are the traders doing in Switzerland? What are the traders doing in Europe? And what are the traders doing in London, and especially London? Shout out to my good friends over there in London. But what are all my investor trader buddies doing in London?
They should be sleeping.
They're not sleeping. You don't know the traders in London. They're at the pub, Tim. That's what they're
at midnight, maybe at 5 Eastern. Yeah.
5 Eastern, it's only 10 or 11 o'clock in Europe.
Good point. Right.
Okay. They're not sleeping yet, but they're probably at the pub. And if they're not at the pub, they're at the movie. And if they're not at the movie, they're eating dinner with their family. And if they're not eating dinner with their family, they're sleeping. But what are they not doing?
They're not trading.
Okay. Yeah. And also, a lot of times, the reason a currency will move one way or the other. For example, Tim, why did the dollar move so strongly today? It wasn't a technical move. Well, there was some of that there, but it was an economic report that came out called the PPI report, and that drove the dollar. Okay, that drove the dollar. Mm-hmm. And so economic reports are one of the major things you need to understand when you're trading currencies, because that is a number one driver of all things currency. And so when you're looking at this at 5 p.m. Eastern Standard Time, there's no economic reports that are coming out in Europe at that point, Tim. There's no central bank announcements at that point. The traders are doing whatever the traders are doing, but they're certainly not staring at their computer monitors. And so even though you can trade those three currencies at 5 p.m. Eastern Standard Time, doesn't mean anybody else is. That's why a lot of times those currencies will just flatline coming into that movement. They're just, even though you can trade them, there's not a lot of movement. They just go up and down just a tiny bit. But at 5 p.m. Eastern Standard Time, what time is it in Sydney, Australia? It's 8 a.m. in the morning.
That's right.
Right. Yeah. And at 8 a.m. in the morning in Australia, the Royal Bank of Australia is opening up. Economic reports that impact the Australian dollar are happening. What are the traders now doing? They're doing the same thing that birds are doing. They're chirping and trading, right? So the traders are trading, economic reports are happening, the sun is coming up, everybody is doing whatever they're doing. And so a lot of times when that bank opens up, and I'm not saying the currency opens up, I'm saying when the bank opens up, you will see the currency start to move one way or the other because of those factors. So does that make sense, everybody? Just understanding the mindset between currency movements when a bank is open versus when a bank is closed. Now, the dollar's a little different in that, Tim, because the dollar never sleeps. Because the dollar is traded when it's 5 p.m. Eastern Standard Time, it's still 8 a.m. in Australia, and they're trading against the dollar, right? Mm-hmm. So the dollar really never sleeps, but other currencies do sleep out there. So in terms of this, guys, the bank open trade is a very simple trade to understand. And it's a purely technical trade with an understanding of what economic reports are happening out there. So a lot of times when the bank is closed, you will see this type of price movement that doesn't move a lot. It might move 5-10 pips, it has a very, very just minimal type of price movement. So what Keith King taught me many years ago, Tim, is I was out in Boston for an event for Legacy Education, and I was teaching for Legacy at the time, and this is about 3-4 years ago. And so and anytime I'd go to Boston, I would always invite Keith out to dinner, get a beer with him, so I could just pick his brain and all things trading and all that jazz, right? Mm-hmm. And I was explaining to Keith how I personally approached the marketplace, and basically I was saying, okay, Keith, yeah. Okay, I'll go get you a Sprite, baby. That's my 9-year-old coming in while I'm live on YouTube telling me I need to go get her a Sprite. Do you want to come say hi to everybody? You want to come teach everybody what a higher high, higher low is? Nope, she's out. But she smiled and said, ugh. Okay, but I was talking to Keith, and Keith said, Matt, listen. What I was doing was I was staying up at night. I was a night owl, right? I was staying up at night, and I would trade the dollar against the pound. I'd trade the dollar against the euro on those opens. And then I would kind of manage the trade for a couple hours after that. And basically he said to me, he said, Matt, listen, what you're doing isn't wrong. It's technically sound, but why are you staying up at night when you could be sleeping and making more money? And I was like, what do you mean by that? He goes, Matt, you can approach this trade the exact same way you approach any other trade in a bank open trade. But how you manage that trade, you can put a stop loss in place and you can go to bed. And that's kind of where I nicknamed this trade the go to bed trade. The go to bed trade is the exact same trade as any bank open trade, Tim. We were in the pre-production show today and you said, well, the go to bed trade, well, I just trade the go to work trade, right?
Yeah, you can do the same mechanics.
Yeah, it's the exact same mechanics, right? So the go to bed trade could be the go to work trade. The go to work trade would be on the dollar if you're in the US, right? It would be on the dollar against the euro, or the dollar against the pound, or the dollar against the yen, something along those lines. But the go to bed trade is the trade on the actual market, ESYM, NQ, RTY, or on a currency that you're making before you go to bed, and then how you adjust the stop loss will change off that. So for example, a lot of times before the market opens, a currency or the marketplace is just kind of flatline like this. Okay. Now, when the bank opens up, the currency will either drive up or it will drive down. And we don't know. We don't know because we don't know how the market's going to respond to certain factors like technical conditions, bank opens, economic reports. So it's our job as the trader to wait to see which way the market goes. Now, a lot of times I will track this on a 15-minute chart. And then when I'm actually looking to trigger, I will drop it down into a 5-minute chart. Now, what I'm looking at here, Tim, is just a simple breakout play. If it breaks out of resistance, that's where I'm buying. Stop loss right under the breakout channel. If it breaks out of support, that's where I'm buying, and putting a stop loss right under support. All right. So that's kind of how that bank open trade works. Is you have an order called a buy stop order. When it breaks resistance, that's when you're looking to get into it. You have a sell stop order on the downside. So this is how it would kind of work. Let me go ahead and look at this now. Looking at last night, and I'm just going to look at the ES, Tim. That's all I'm going to look at because it was the best bank open trade from last night. So we're looking at the ES here. So I'm going to go down to a 15-minute chart here. Okay. And we're just going to look at the overnight from yesterday. Okay. So this is the market last night. Okay. You can kind of see it on my time frames here. This is 8 p.m. This is 10 p.m. And then obviously midnight over here. Now, what you're seeing here is you're seeing the market, and this is the same way currency happens. There was just not a really good go to bed trade last night because you had the PPI report coming out this morning. But in terms of this, guys, you had a very clear channel on the S&P 500 last night. It was just range bound, and this is what you're looking for, guys, in the go to bed trade. You're not looking for price movement. You're looking for something that is very clearly range bound, like the S&P last night was. It was just hovering between that 2802. Well, actually, I have it at 2800. It was hovering at 2800 by 2811. Okay, you have a clear support and resistance channel on that 15-minute chart. Now, the go to bed trade is basically you're waiting for it to break out one way or the other. So, Tim, you can go ahead and put an order. Okay, it would be a sell custom with a stop loss. Okay, the sell custom right underneath 2800. The stop loss, we'll just say put it at 2802, for example. Okay. So you put that, and this isn't going to work because obviously the market has changed between today and yesterday. But you have that order, 2800. You have your entry order right here. You got your stop loss order right there. You can do the same thing on the top side here. Now, Tim, I don't even need to really kind of hang out and wait for this because I know I got my stop order. I know I got my limit order, right? And the one thing you have to concern yourself with, if volatility does change, then it might your broker might mess around with your orders here. But in terms of this, I got a clear entry order and I got a clear stop loss. Okay. And again, you can do the same thing on the top side there. So I'm prepared for the international market to open up here, Tim, because at this time frame, this is when you start to see the sun rise in Europe, right? This is when you start to see price movement happening, is like right at that midnight, 1 o'clock, 2 o'clock in the morning on the East. So as you watch this kind of go forward here, okay, look what happens, Tim, right there. What opens up right now? Well, Tim, that is the ECB open out of Europe. That's what that is. Right here, the ECB opens up out of Europe, and what happens? You see downward movement in price. It breaks 2,800. Okay. At that point, you're into the trade. At that point, you have a clear stop loss. And then what happens? It comes back, kind of hovers around that, and then just starts kind of going down. Now, right before you go to bed, what do? Okay, so I'm going to take the order off so I can kind of show you the adjustment. So right before you go to bed, I'm going to create an alert, and we'll just say this alert is my stop loss order. Okay, so I'm going to create an alert right there. All right, so here's my original stop loss. Okay, in this example. Well, right before you go to bed, you adjust that down to your entry price. Okay, now as I've adjusted that back down to my entry price, okay, how much risk do I have?
Well, you should be at break even at that point.
You should be at break even at that point.
Take the risk out. Yeah. Yeah.
So right before you go to bed, you're at break even, and then you wake up in the morning. Right there, and you simply adjust that stop loss underneath the intraday resistance. And then as it goes down further, you adjust that stop loss underneath the intraday resistance. And as it goes down further, okay, well, actually it hasn't went down, but if it breaks down out of 2770 right here, well, I would adjust that back down right underneath that breakout channel. And then at some point, Tim, I'm going to get stopped out. But from the entry to where the stop is, you're up 17 points on the S&P 500, which is a really good trade.
Well, it's $850 on one contract. And by the way, the margin to play one S&P E-mini contract depends on a broker. But I think Thinkorswim, what do they hold, about 5K, 6,000 on that one? The E-minis are probably the most popular trading product in the futures market, and there's E-minis on the Dow, there's E-minis on the S&P.
And Tim, there's different ways to trade this as well. You can trade it in the oil market, right? You can trade it, and you have micro contracts in the oil market that you with QM instead of CL. You can trade it on the RTY, which is a cheaper margin than the S&P. S&P is going to be right around 6,500. The NASDAQ is going to be a little bit above that. The RTY, I think, is about 3,300, 3,500 per contract. You can trade it on a currency with as little as $20 into a trade. Right? There's a lot of different ways to do this. I just wanted to show an example on the S&P 500 because that's the one that was kind of setting up last night.
Well, and for those of you who are Tackle Trading Pro members, just a quick reminder that course, Futures 101, will help give you some training on how that product, the basics of the product do work, right? And that's an important thing to go through. Take those self-paced courses.
Now, what I would do, Tim, if you're new to trading bank opens, okay, and if you're new to trading currency, you should never start in the futures market. Okay, the futures market, it's not just technicals you need to understand in the futures market. Margin requirements, it's just simply an understanding of margin, how margin works in the futures market is vitally important. But there's other ways to play it out there. I would virtual trade these things at least 50 times before you actually do it in the live market.
Yeah, for sure. And testing in environments like the on-demand, actually, you can do some work there. I found
you can do a lot of work there. You can do a lot of work there in the futures market, and you can go back test this. But the bank open trade, the go to bed trade, the go to work trade, however you want to categorize this, is something everybody needs to learn how to trade. Because if you can understand when bank opens up, I want to give you one simple stat here, Tim. In the last 20 years, okay. Does the market move more from the open of the stock market to the close, or from the close of the market to the overnight to the open the next day?
That's interesting. So do you get more actual range? So ATR, average true range.
Let's ask everybody here. Yeah. Okay. So I'd love to give credit for whoever put this on Twitter. I'll find it and retweet it because I found this on Twitter. Some guy did some research. It was excellent research. But Tim, in the last 20 years, If you would have bought the very open of the S&P to the close of the S&P, down 5%. Think about that. If you would have bought the close of the S&P to the opening the next day, you would be up 540%.
So the overnight action is that much.
It's not even close. It's literally not even close anymore. We live in a global environment, and if you're going to be a trader in any capacity, you need to understand 24-hour conditions.
Yeah. Guys, that's pretty. First of all, thanks for the research on that, Matt. And everybody, give Matt a great job, Matt. You really did do an excellent job breaking down that go-to-bed trade, go-to-work trade. I like the go-to-work trade. I like the name of that too.
Well, you like to go to work trade because you're not a night owl. You're in bed I think you're in bed by like 5 o'clock Eastern.
C'est la vie.
Yeah, I'll be up at 2 o'clock in the morning.
Yeah, it is what it is. A few stocks I want to rapid fire as we're kind of wrapping up our last halftime report of the week, Matt. We did look at PCG, a few other Tackle 25 stocks that have significant setups. Disney, we talked about. Biogen, give me BIIB if you would. And they had earnings earlier, a few days ago. And obviously weakness, breakdown on the earnings a couple weeks ago, rally back. It was looking very, very bearish, moved back into more of a neutral condition, but 2 red candles in a row. I would probably hedge that if I was long Biogen. Bank of America.
Oh, yeah. If you're doing cover calls on Biogen right now, it's a good cover call stock, by the way. It's just volatile. You absolutely have to hedge that.
Yeah, for sure. Give me Bank of America, BAC, another Tackle 25 stock, kind of rallying back into some old.
Sell calls, buy puts if you're doing cover calls. That's easy.
I think so as well. And then PayPal, another Tackle 25 setup that I want to take a look at. Very popular company, moving back into a neutral range. But this is the kind of place where, you might add that hedge on a red candle. This one could be debated.
Yeah, you got to like the pivot high there. You got tremendous support all around, all the way down to $82. I don't know. I think you're fine just if you're doing cover calls on this one. I think you're fine just writing the cover calls. You're hedging 3% of that anyways.
Yeah, significant setup off the option report here today is MU selling off again, showing some weakness.
Yeah. MU can fly.
Yeah, it sure can.
Yeah.
And LKQ off the stock report actually showing a pretty good signal.
Trigger, for me, that's an easy trigger underneath the 20-day moving average, Tim. I wouldn't trigger. I would not trigger into that. I know it's coming underneath yesterday's lows, but to me, you got significant price levels around that 20-day moving average. If you can kind of see it here on the intraday, Tim, look at those support levels at 27.6. So I understand that it came underneath yesterday's low, but to me, that 27.6 barrier is very important. That's right where you have those overnight numbers right there, those intraday levels. So that would be confirmation for me underneath 27.6.
And, right now, Matt, this is when I transition my week and start prepping for that scouting report meeting we have here in a couple of hours. Obviously, all the stuff we had from the watch list last weekend, if they're still in good setups, you're going to keep them and roll them into this week's watch list for your personal watch list. But I'm going to break down every company that's tradable with options and go out and find some
picks. I'll just tell you, I'm about 20% done with my research here, Tim. And I got potential 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39 potential trades coming in for next week. Yeah, there's some good setups out there right now.
There's a lot of bear setups as well, but there are some good bullish ones. I'm still finding a few here and there that we're going to pitch to the coaches and the team, and we'll talk about it.
Let me give you an example of a couple of the bullish and the problems with the bullish picks coming into this week, Tim. A couple of them, like take for Mosaic, for example. This stock is just a burner coming out of their recent earnings, broke out of the 52-week high at 34. Get this on a watch list. It's overextended. I'm waiting for that to pull back down into 34, most likely. And a stock like this, Tim, will never be on the scouting report this week, just simply because there's no trade here because it's overextended. But for next week, if we start to see that retracement take hold, that for next week is going to be a very good trade. So a lot of these bullish trades that, were on this week's report were very good. Here's one again, breaking out of that same type of 52-week high there on CCE. Dr. Pepper, Tim, KDP, Get that on a watch list. Dr. Pepper. I might go drink me some Dr. Pepper today. I haven't had a Dr. Pepper in 20 years.
It's been a long time, although it is very good to marinate pork with and do a little slow cook.
I like that. I like that. My wife says I need to eat more chicken and pork and less steak.
It's
I
true.
think I'm getting old. I think that's what it means. Coca-Cola, look at this bad boy there, Tim. So you're seeing a lot of this strength coming into these kind of consumer staple type stocks, Walmart, Coca-Cola, Dr. Pepper, those types of things. But a lot of them are too overextended. Wait for them to come back down.
Guys, that's it for our halftime report here. Thanks for being a part of it. TackleTrading.com. Simplest thing, Matt, is, on the weekend, we've got those reports. Get out there, get in there on tomorrow. And by the way, we changed the delivery time of them. I know they used to be a little bit earlier in the morning on Saturday, but what we did is we made it standard. They should come out by about 6 o'clock Eastern in the afternoon, right?
Yeah, I'm on the Forex report this week. Guys, and if you want to, if for the pro members, hold on, I'll be right back, Tim.
No problem. Somebody's either at the door or a dog is barking or whatever it might be. The joys of working from home, by the way. And if you're a pro member and you are not watching all of the reports, definitely do that. I would do them in this particular order if you're trying to break down top-down analysis. Number one is the market scoreboard. Now, that should always get out there by Friday night late, usually, and then it'll break down all of your market analysis. Always review the scoreboard before you go into the picks, okay? For sure.
Very quickly, Tim, a couple of the Forex reports that I've done recently. If you guys want to get a little recap on that Bank Open trade, Forex report from September 29th, I did a little deep dive on the 24-hour marketplace. But I'm doing the Forex report this week. And by the way, my house is being flooded right now, so I got to hurry. Give me a topic that you guys want me to write about.
In Forex.
Yeah, in Forex. I did correlation a couple weeks ago.
I think lot size.
Lot sizes
would be a simple one.
Like a simple basic one on like Forex definitions, tick values, lot sizes.
Yeah.
Those types of things.
Yeah, what's a pip? All those kind of things.
Pip, just kind of a basic one. Do you guys want me to do like a basic just Forex stuff?
I think it'd be great.
What is a pip? What is a lot size? What is a tick value? How much margin do you have to put into the trade? That kind of goes to lot size.
Sounds great.
All right, that's fine. That's an easy one. That'll be a good one.
If you've got water running in your house, go.
Yeah, I do have water literally flooding my basement right now.
Go.
So
all right.
No, it was not the Sprite, although that is as important. So,
all right, good job, Matt. Good job, Cody. Guys, we'll see you guys next Monday at the next halftime report here, TackleTrading.com. Always subscribe and click the bell, and we'll see you on Monday.